All right, back to the snowstorm story now, because as many as 1.2 million people could have been affected by all the airline cancellations due to this week's blizzard. Will all these troubles hurt the airlines? We're joined now by Hunter Keay of Stifel Nicolaus. He's a #1 ranked analyst on United and Delta, according to Bloomberg data. And Hunter, good morning and thanks for joining us. Let's just go over the timeline here, because the actual storm began on Sunday. Flights were not resumed until Monday night. It's now Wednesday, and the stories just keep getting worse. You've got Cathay passengers sitting on the tarmac for half a day. Should the airlines have done better? Could they have done better?
I mean, there's really not much the airlines can do at this point. I mean, obviously they're sort of beholden to the weather, and, the airports are obviously working as hard as they can to clear the storms. In terms of the financial impact at this point, it's important to note that this storm occurred after Christmas, not before Christmas. So these stranded travelers need to get home, as opposed to the storm occurring before Christmas, where they may have preemptively canceled the flights without a fee. So airlines will recapture the majority of this revenue because people need to get home from the vacations where they already flew out to. So that's an important caveat to note when you're trying to evaluate the sort of financial impact that's going to accrue.
Callie was telling us earlier that some analysts are estimating $150 million in lost revenue. Does that sound about right to you?
That seems a bit aggressive, frankly. But again, it's going to be spread out over a number of airlines. So in terms of the publicly traded airlines, the big guys like Continental, United, who has a hub in Newark, it's going to probably be a lot less. I expect the magnitude to be somewhere in the neighborhood of maybe $15 to $30 million. Let's not forget, in February there was 35 inches of snow that fell at Newark, and it cost them $15 million. So I think similar magnitude is reasonable in this particular event.
Hunter, just 1 to 2 weeks ago, everyone was looking at what happened in the UK and at Heathrow and kind of shaking their heads at their inability to deal with the weather and the problems. Is there any way for airports or the airline industry at large to improve operations during inclement weather?
Well, I mean, this obviously, I think, goes back ultimately to improving air traffic control. That we're still using a 50s-based ground-based system that's very obsolete. The flights themselves need to be spaced out much more than they probably should be. So there's some inefficiencies, I think, that structurally, from an infrastructure perspective, could be improved. But really, not much. I mean, there's not much you can do. I mean, these guys don't really know what's going to happen until after the fact. And a lot of airports, especially in Europe, just are ill-prepared to handle this kind of event.
Okay. Now, this event happened at the end of the year, and we know that the airline industry at large returned to profit after almost a decade of losses. Next year, the airline industry is expected to be profitable, but less so. Is that all because of rising fuel costs?
Well, see, I'm not necessarily sure that that's true, actually. I think, I don't think 2010 represents a peak margin year for this industry, and they still have a lot of dry powder on the ancillary revenue side. For example, charging $25 for international first bag and reducing the exemptions from sort of the low-level preferred frequent flyers for bag fees. You could actually see a $2 to $3 billion increase in industry fee revenue, which is extremely high margin revenue. That could represent maybe 200 basis points of margin improvement if these guys decide to do that. And the only way they're going to do that is if we have high fuel prices. So at Stifel, we're pretty bullish in terms of the margin expansion, as long as airlines continue to do what they've been doing to respond to high fuel prices.
So the excuse will be higher fuel prices, but could they come out with just extra charges in general? I mean, I remember Ryanair in Europe was going to make passengers pay for bathroom visits.
Yeah, right, exactly. I mean, I don't think it's going to get that aggressive here in the States, but I do think that there is more low-hanging fruit on the ancillary revenue side. Let's not forget, bag fees are still a relic of fuel surcharges. The first bag fee came on in May 2008 when crude was on its way to $150 a barrel. So, we're happy to see high fuel prices. We embrace it here. At a certain point, it becomes problematic, of course, maybe $115, $120, but until that time, airlines are going to be disciplined on capacity, and they're going to pursue unpopular but very margin-accretive fees, like international first bag fee. That's very profitable. Okay.
Now, labor, of course, is another big cost center for the airlines. To what extent is labor still a major risk for the airlines, or have they sorted it out for now for the medium term?
Well, I mean, there's a lot of open contracts in the industry right now, particularly on the pilot side. Labor does have more bargaining leverage than they've had in a number of years because 2010 was such a good year for the industry. But again, every dollar that crude goes up, that represents incrementally less leverage that labor has in contract negotiations. So you're going to see management teams, push for flexibility on the scheduling and productivity side, given the uncertainty of commodity prices. But, it's an ongoing risk. I think labor's going to always get their piece. It does serve a bit of a natural hedge to the industry, but I think you should expect contracts in the upcoming round of negotiations to have modest pay raises for the labor sides, offset by productivity increases, so the absolute cost impact on the airlines could be mitigated.
All right. We thank you for your time. Hunter Keay of Stifel Nicolaus joining us from Baltimore on the airline industry.